Good morning, everyone. Hope you're all having a pleasant day today, and thank you for dialing in for today's webinar. So, welcome to Bursa PLC's Investor Relations for You series number 12, whereby the topic for today will be on BR Capital, the digital credit market platform for PLCs and non-PLCs. Joining us as speaker for today will be Keng Seng, who is the CEO of BR Capital. Keng Seng has over 20 years experience within the financial services sector, primarily in investment banking, whereby he has experience in both equity and debt fundraising, as well as M&A and other forms of corporate finance. Keng Seng has been with Bursa Malaysia for more than 4 years and has previously served as the head of alternative and secondary markets. So before I'd like to pass on to Keng Seng to present on BR Capital, participants, if you have any questions regarding today's webinar, feel free to post your questions in a Q&A chat box below. So without further ado, I'd like to pass on to Keng Seng to present on BR Capital. Over to you, Keng Seng.
Thanks, Yunsen, for the intro and the background. Very good morning to everyone, ladies and gentlemen. I am Keng Seng, currently heading one of the business units within Bursa Group, known as Bursa Malaysia Capital, or in short, BR Capital. BR doesn't mean it's Baskin and Robbins, like a lot of people seems to confuse with the word BR, but BR really stands for Bursa and RAM. Today, really happy to share some quick insights about our fundraising platform. So without further ado, let me just jump straight to the slide. So first of all, I just want to give a quick overview of the typical fundraising methods available to both listed and unlisted company. Essentially, you have two major branches, the equity and the debt. Now, under equity, PLC can actually tap the equity capital market through private placement, typically done under the general mandate. You also have rights issue where you go back to the shareholders to actually raise funds. Now, for unlisted company, you do have IPO to consider when you go for listing. And for listed company, you may also consider spin-off or demerger, essentially a spin-off of certain subsidiary or even property into a REIT. So that is overall an equity space in terms of fundraising. Now, on the debt space, it's very straightforward. I think everyone here is very familiar with bank borrowings. In fact, bank borrowings is effectively the preferred route for most of the companies, whether it's listed or unlisted, because as you know, you can call your relationship manager from the banks to get a loan, and it's quite fast and easy. Now, when a company scale up, grows bigger, and the fundraising requirement goes up, naturally, they would tap the bond and Sukuk market, essentially to broaden their investor pool and so on. Now, today, I'm going to talk about this third instrument, a new debt instrument that you may or may not be familiar, but it's already existed since 2016, where small enterprises, small companies tend to use investment note under the P2P financing platform to raise a small funding requirement. Now, so what are investment notes? Now, this is essentially the slide to summarize the legislative definition of investment note. Essentially, it's a monetary loan executed or offered through an electronic or digital platform. So essentially, it's a loan, it's a debt instrument. Now, for issuance of investment note, it's actually governed under the SC guidelines on recognized market. Now, just want to talk about investment note. Now, investment note essentially is actually a non-bank financing. So bank borrowings, you're very familiar. You get your loans from the banks. Bonds and Sukuk, you get it from the investors. Investment notes is like a loan that you get from the investor. So essentially, it's a non-bank financing. Now, in terms of the global market, the term private credit is very global term. We have seen that a lot of companies have resorted to non-bank financing or alternative channel to meet their funding requirements. As you can see on the graph on the left-hand side, the global private credit market really has grown significantly from since the GFC in 2008, and then until now, we are looking at about 1.5 to 2.1 trillion of asset under management in private credit. Now, in the Malaysia perspective, we do not really have an official term or framework for private credit. The private funding in Malaysia can be very big, and as you may be familiar, that some unlisted company may issue preference shares. Some financing can be done through the what we call KPKT, or the Housing Development Financing License. So there is no really an official term for private credit in Malaysia. But what we have, or what SC has introduced under the SCRMO guideline, is the P2P financing. Essentially, as you can see, the P2P financing has actually grown from 0.4 billion new issuance per year to about close to 2 billion for 2023. So this really shows a greater acceptance of alternative financing in Malaysia by both the issuers and as well as the investors. Now, again, PR Capital, not Baskin Robbins, is Bursa RAM Capital. Just to introduce again, we are a digital credit market platform, jointly owned by Bursa Malaysia, 51%, and RAM Holding, as you probably be familiar, the credit rating agency group, 49%. Now, we are a recognized market operator, registered and approved with the SC. And our main objective really is to provide new fundraising avenue to both PLC and non-PLC. Other than their traditional bank borrowings, this is an additional new avenue that you can consider, as well as to provide new fixed income investment opportunity to investors, to all types of investors. You have retail, individual, corporate, institutional, high net worth family offices. So it's across the quite broad base in terms of investors. Now, our target segment is, well, actually quite broad, but the focus of our target segment really is to look at the mid-tier market. We've looked at, as you can see here, the bonds and Sukuk space typically is 250 million and above. Usually, when you talk to investment bank, they would actually quote minimum 500 million. Where BR Capital intend to serve is anything that is below 250 million, because anything above 200 million, we think that would be a more palatable for bond and Sukuk market to serve. In terms of our target prospective issuer, we specifically look at mid-sized company, medium unlisted, large unlisted, and also more importantly, the PLC and the subsidiaries. So we don't really cover the micro or small enterprises. These are mainly covered by the other 12 P2P players. They tend to focus more on the micro and small financing, whereas BR Capital, we focus on mid-tier financing, at least of a 5 million and above. Now, why BR Capital? If I may just sum up in 5 points. So when you look at this slide, as a company, you may have numerous ways of fundraising. You may have different banks, you may have different relationship managers serving you. You have no exhaustive list of funding resources. But why BR Capital is because we want you to look at how to expand your investor base and potentially where is your funding sources. Essentially, it's a diversification strategy. You may have your main source, but again, having said that, the future, the now, things can change. It is important to have all sorts of backup, numerous ways of, in terms of meeting your funding requirement. Now, establishing a present credit rating in debt capital market. Now, every note issuance on BR Capital will be credit rated by RAM rating. Now, this is the part where currently your company may not be too sizable or has the scale to actually raise bond and Sukuk. You may want to test out our platform in terms of the credit rating so that you establish a profile in the debt capital markets to raise mid-size funding. But eventually, as you progress and bigger size, with the debt credit funding, eventually that will morph to a bond and Sukuk program that you may establish in the future. So essentially, we are establishing a profile in the debt capital markets for the issuer. Of course, meet your funding needs. We always cater minimum 5 to 30 million. Again, this is something that companies may want to raise small scale funding. They may come to our platform naturally. Direct method is something that is quite different from bond market. Now, typically when you raise bonds and Sukuk, you need to appoint the advisor, you need to appoint the lawyer, you need to appoint the rating agency, and so and so. But for our platform, we promote seamless fundraising approach. Essentially, it's non-intimidated. You, as the issuer, come to our platform, submit an application, you do yourself. So essentially, that cuts a lot of, I would say, streamline certain processes. And number two, of course, it may be cost-effective overall in terms of overall funding. Of course, the fifth point, cost-effective model on BR Capital, we emphasize on success basis. So there's another slide in subsequent slide where I will talk about the fee structure, but our emphasis is to reduce the initial establishment cost and more towards more greater weightage on success basis and pay for what you raise. Okay, our ecosystem, very simple. We are just in between the issuer and investors. We are just a digital platform. For issuers, we are looking for both listed and unlisted issuers that intend to raise at least minimum 5 million with a minimum tenure of 1 year. Of course, the companies have to be incorporated in Malaysia. In terms of the investor, it's a broad base. Of course, we have institutional investor, high net worth individual, family officers. Even I include this term business strategic partner. Could be your customer, could be your supply chain side. We also include retail investors, employees, and more importantly, shareholders or the sponsors of the company. Now, this slide really ties into that the earlier slide on why BR Capital. Now, these are the reasons why, these are some of the observations that we see on the ground, some of our prospective issuers that comes to us, what are their financing dilemma now, and why they would consider BR Capital as a possible approach to raise their fundraising. Number one, companies, issuers that want to diversify their business. For example, one particular company doing consumer services want to diversify into solar generation business. So typically when it comes to business diversification, it's a bit challenging, maybe challenging for the banks to consider your credit because there is clearly a lack of track record. Now on BR Capital, I'm not going to say what is bankable or what is not bankable. The more importantly is that every company has their own risk and every financing request has their own risk. So we would just evaluate this on a standalone and ultimately to host it or to be offered such risk to different investors who may have a more acceptable risk tolerance compared to the banks. Issuer industry limit and other lending constraints, very common. Banks have just limit their limit that's full on you. So potentially you just need to diversify to other banks. But if it's an industry limit, that means all the banks kind of like look at this industry and say that, look, the limit's just full. So potentially you may want to consider opening up this financing request to other investors other than the banks. Lack of hard assets and collaterals. I understand that most banks would love to have hard assets, secured financing and collateral. This is some of the challenge that some of our prospective issuers actually encounter. So again, for BR Capital, we are not saying that we want secured or unsecured. In fact, our first two issuances actually are on unsecured basis, because at the end of the day, we believe that each financing request may be suitable for investors that may be different from the banks. Equity financing issue, very simple. Let's say you have a project that is like 100 million. The bank is only willing, comfortable to lend you 60-40, essentially 60 million. Then the bank also expect you to pump in another 40 million from your internal funds. So essentially, 40 million from existing banks, cash and bank balance is actually a big thing. So usually either the company may look at raising equity, if it's a listed company, may raising equity through private placement or even rights issue, or potentially they may even come to BR Capital to bridge that funding requirement that is not covered by the bank. So essentially BR Capital we really want to complement the bank in terms of the financing structure for a particular project or for a particular company. Preference for fixed rate now, most of so far, I think in terms of instrument, we are pricing it based on fixed rates. Now, fixed rate is important for some companies. Essentially, you have better margin planning for future, especially in a project-based kind of business. Then fixed rate will be better. Bank borrowings tend to be on the floater, cost plus something spread. So fixed rate could be a better option for some issuer. Overall, better financing still, no guarantee, but again, it's something that we do come across prospective issuers that says that their existing banks do impose very strict terms. They are looking how best to streamline those terms. So we are having chat with all these prospective issuers. Limited sources of fundraising, of course, again, something that for issuer to think from a backup strategy, not just one bank, not just two banks, but look at other angles, maybe bonds and Sukuk or even BR capital. Finding the right mode of fundraising. What we found is that some companies wants to raise bonds and Sukuk, but the funding requirement is actually way lower than what is commercially bankable or palatable for bonds and Sukuk. Hence, potentially, you may want to consider BR capital, which is more catered towards the 20 to 30 million fundraising requirement. So our product, very simple, is a simple term financing, minimum 5 million and above. Financing tenor, 1 year and above. It is both Sharia or conventional. Utilization can be general working capital or capital expenditure. Interest or profit rate is subject to credit rating and of course depends on the tenor. Naturally, if you are more high risk, you have to pay higher interest rate or higher profit rate. And if your tenor is longer, naturally you have to pay a higher rate to compensate the investors for holding your investment note. Now, what is difference between this particular product and compared to bonds and Sukuk or even bank borrowings? There is actually part of regulatory requirement. There is a minimum 80% of target fundraising that is required. So for example, if you want to raise 10 million, the minimum amount that must be raised must be 8 million to be successful campaign. It's actually an all or nothing approach. So meaning to say, if you manage to raise 6 million, the entire 6 million has to be returned back to the investor. So there's no you can collect whatever that is being raised. So that is a requirement that has been set by the Securities Commission. Of course, investor is, like I mentioned, is open to everyone, institutional, high net worth individual, moms and pops, uncles and aunties, and everyone. Okay, so who are the issuer? Now, issuer, we are looking for, of course, listed and unlisted company, subsidiaries of listed company. But what is more important that, before you come to our BR Capital platform, more importantly, if you want to raise 2 million, for example, you want to raise 20 million in 2 years, essentially, you must start thinking, how do I repay that 20 million in 2 years? So must have a clear sources of repayment, not complex financing structure, not those leverage buyout and all those arrangements. Of course, companies tend to have a stable cash flow. That is important because one of the key criteria for credit rating is that there has to be a stable cash flow profile. Of course, every year there's business volatility, but 5, 10, 20%, that's fine. But essentially, they want to see the overall credit stability in cash flow. Sector is agnostic. Again, emphasis is on credit evaluation. Now, our fundraising journey, very simple. If after this chat, after this presentation, if you're keen to explore further, we have our contact details in our last slide. Essentially, do reach out to us, have a chat with our relationship manager. They would actually, look at your situation, understand your funding requirement, and assess the suitability of your financing request to be brought to our platform. So after that prelim chat is done, ultimately we'll go to the onboarding and financing request. Then we'll start the due diligence and credit evaluation, including the credit rating process by RAM. Then once everything done, documentation is all cleared, we will start the campaign and hosting. Now, the campaign usually open for 30 business days. Now, sometimes if the campaign is fully subscribed, it can close within the first day or even the first 20 minutes, which I will share with you one of my actual case. Disbursement 2-3 days after 3 to 5 days after campaign close. So the entire process is up to 3 to 4 months. Again, this is a capital market product. I also understand bank borrowings tend to be a bit faster than 3 to 4 months. But if there is a strong demand, this 3 to 4 months could be cut to 2 months. Okay, credit rating process, very simple. Essentially, RAM rating will adopt very similar to their bonds and Sukuk approach. They will look at qualitative and quantitative, and the credit rating report will be published to the investors to our platform. There will also be an annual credit rating surveillance by RAM rating. So very similar to the conventional bond and Sukuk. Now, this is the rating scale that is relatively new to, I think, to all the investors who are familiar with bond and Sukuk. Typically in bond and Sukuk, you have your AAA, AA, single A, those. But because we are catering for mid-tier market, essentially a new rating scale is being introduced, with R1 being the least credit risk, R9 is the highest risk. Of course, R1 to R6 is what we call investment grade, and each of these credit rating will have the assigned probability default, as you can see the number on top of R1. So what that means is that R3, 1.5 to 2.59, what that means is that 1.5% there's a probability default within 1 year. So that PD rating is the something that you can actually map back to the conventional bond rating. Okay, this is our real life examples. We did an unlisted entity as our first issuer. It's called Project Point. They raised 5 million. They will be raising few tranches, but the first tranche they raised was just a small amount of 5 million, 2 years at 7.65, rated R4. So it was a very it was well received, and on the first day, the entire subscription was closed within 20 minutes of offering. So the next one, current campaign, we have Project Everest. Also is a subsidiary of a listed PLC. So it is raising minimum 5 million up to 10, but they're more likely to be minimum 5. And this one will be on pre-live and expected to go live next week. Okay, so more interesting from an issuer perspective. So what's the catch? What's the cost? What's the charges? Now, again, I mentioned our focus is more on success and pay as you incur. So we will charge upon a financing request received after our relationship manager determine the suitability of the application, one-off nominal processing fee of just 15,000 to kickstart the credit rating, the whole credit evaluation process. Now, then thereafter, all the documentation has been finalized. We go to campaign. So once the campaign, we achieve at least 80% of the threshold, that is when the annual hosting fee will apply, of course, as low as 0.8% per annum, depending on the tenure of the instrument. There will be a prevailing applicable stamp duty because it's treated like a loan. Of course, interest cost or profit rate is subject to credit rating, market factor, and also the other thing is the tenure of the instrument. Okay, so this is really my second last slide. Again, today really is a quick intro to our platform. Now, the term digital credit market platform really is not a legal term. It's not a coined formal official term. But what we at BR Capital see this term as, it's more like an ecosystem that we want to be. Essentially, we want to facilitate or encourage inter-industry, intra-industry funding mechanism. Essentially, what that means that you can be the issuer and your issuance being subscribed by your customer, your stakeholders across the value chain, or you also can be the investor for if your customer, your value chain stakeholders issue in those, you also can be investor. So ultimately, we want to look at BR Capital not just the fundraising platform. We want to encourage that collaboration, that community building, a community of issuers and investors. Essentially, we want to, the issuers or issuers to issuer, issuer to investors, or investor to investor potentially can form their business partnership outside the platform, maybe like a business venture, or how they can assist each other in terms of manufacturing and services and so on. So essentially, digital credit market platform, yes, it is a platform for financing on a digital basis, but overall, we look at it as an ecosystem, as a community of issuers and investors. Now, I've reached my last slide. This is our contact detail. You can, visit our website, brc@bursamalaysia.com. Drop us an email, brc@bursamalaysia.com, or even scan the QR code. If you have any financing requests, or you want to find out more, or the other angle is that you want to be investor on our platform, do sign up. The KYC, the onboarding process is actually quite seamless. Yeah, so without, this will be my last slide. I will pass back to Yun Sun to take it from here. Thank you so much.
Thank you, King Seng, for the insightful session. So we'd like to open the floor to questions from the participants. Participants, do be reminded that you can post your questions in the Q&A chat box and respond to those questions accordingly. Thank you. So we have our first question. So the first question is, can this be applied to a company that is not incorporated in Malaysia, but is a foreign registered company in Malaysia for PR Capital?
I'm sorry, unfortunately, currently we're only open to Malaysian incorporated companies. We do have inquiries for Malaysian incorporated with a foreign shareholder. That's fine because it's still Malaysian incorporated company.
Okay. So we have another question, which is what is the minimum RAM rating accepted within PR Capital?
We are open to R1 to R9. There is no minimum accepted rating required for BR Capital. Again, it's an inclusivity principle that BR Capital adopt. I think you have to. So sorry. So essentially, there is no minimum. We are open to R1 to R9. But what is important, our main objective as a platform actually is to safeguard the interests of our investors. The money they will be lending or investing in the platform. Of course, the more importantly is that there may be certain company, even though they are maybe R1 or sorry, R3 or R4, R5, potentially we have our internal credit committee that will be subject to deliberation, approval, and so on. So there will be angles of potential rejection because we felt that the risk may be too high for investors to take up. Again, our main objective is to safeguard the interests of the investors. Thanks.
We have another question. So this question is, can individuals invest into these type of investments issued by the companies?
Can. Employee shareholders, that's fine.
Thank you. So we have another question also as well. The question is, what is the process in the event of a default?
So in the event of default, under the SC regulatory guideline, the platform operator BR Capital has to coordinate the recovery process. It's very similar to bond and Sukuk. We will engage external legal to start the recovery process. Of course, with any typical credit event issue, the best way is always seek a mutual consent with the issuer. Ultimately, is to restructure before it turns bad. So we would encourage our issuer, if they have problems, to engage us actively and to start the restructuring before the recovery. But if there is, unfortunately, when that goes to default, then the normal default process will keep saying the platform will coordinate the whole process with the assistance with the external lawyer. Thank you.
Okay, thanks, King Sing. So we have another question. Actually, it's 3 questions, but it's written in one chat. So what is the longest tenure for the loan? And can the term be longer than 5 years and up to 10 years? And lastly, what is the interest payable half yearly or on a quarterly basis?
Okay, so currently there is no capping on tenure. Now, but what is important is based on feedback from our current investor pool, or what they are comfortable or not comfortable. So currently, what we are looking more is up to 3 years lah. What that means, it could be 1, 2, or 3 years. Now, as we develop the market, as we have a bigger investor pool, and more importantly, we are also working on to actually implement a secondary market. Essentially, the tenure we envisage will be greater than 3 years. But currently, for commercial reasons, we are looking at 3 years. Now, interest rate or profit rate, if it's Islamic, we are looking at semi-annual, quarterly, semi-annual and quarterly. I think the current 2 issuance that we are doing is based on semi-annual bullet repayment. On the first issue was 2 years bullet, the second issuance was 3 years bullet. So it's not an amortized structure. Yeah, thanks.
Thank you, King Sing. We do actually have quite a lot of questions asked today. So the next question is there any benchmark yield or profit rate that issuers could refer to when investing in BR Capital?
What happened is it will be good that if you can engage our relationship manager, let them understand your financing request, let them assess suitability, and of course, ultimately, more importantly, they will be able to share some light in terms of pricing. Okay, if you see the issuance, the actual issuance, we have Project Coin, the first issuance. It was rated R4, the middle range. It was a 2-year note. It was priced at 7.65% per annum. And you look at the second issuer, which is rated R3, and it's all 3 years unamortized, 3 years bullet. It was priced at 7%. So essentially, there is a pricing range, just that we hope that the issuer can engage us, and then we're able to see whether there's suitability or not. But more importantly, in terms of pricing, also discovery. For example, you want to raise 20 million. And of course, we help you reach out or facilitate that reaching out to the institutional investors. Sometimes institutional investors, for them to come in for the entire 20 million, they may demand a different pricing. For example, I'm willing to come in 50 million, but at 7.5% for 3 years amortized. So they may impose certain structure like that. Again, we are still relatively new. We are still trying to introduce a product that is conventional, that can be understood by both issuer and investor. But as we move through the journey, there'll be a lot of tailoring, customization, and so on and so on. Yeah, thanks.
Thank you, King Sing. So we have the next question is, what is the cost of issuance for a 20 million loan for example, legal due diligence, stamp duties, etc.?
So the cost, let's say 20 million, what's the initial cost? So for example, 20 million, you would initially, after you completed your financing request, you put in an application fee of 15,000 ringgit. That is non-refundable. Okay, that is non-refundable. Now, so katakan we finish all the due diligence, everything, credit rating, everything is good to go, everything's sorted out. So you go for your campaign. Now, once you go for a campaign, assuming you achieve the entire 100%, 20 million. So what you need to pay is only after successful, is first you need to pay our hosting fee. It's annual, let's say 2 years. So you pay 0.8% per annum. So 0.8, so 1.6%. That's one. Now, stamp duty, because you raise 20 million, you pay the 0.5%, the standard, whatever you pay for the bank borrowings, 0.5% times the 20. Of course, the legal document, there's some legal fees, a legal confirmation, CP confirmation. A broad range potentially could be 15 to 20,000. Yeah. Thanks.
Okay, so for our next question, we have from Audrey. She asks, can you explain more on the recurring interest cost subject to the credit rating?
Yeah, so it's a very simple understanding. So the higher risk a company is, the higher return is required to compensate the investors. So let's say R1 is our best. I would say R1 is the least credit risk. Therefore, they will pay the lowest rate in a natural sense. And R6 is higher risk. Naturally, you pay higher risk. Of course, let's say if it's the same rating, R4 and R4, for example, but one is 2 years, the other one is 3 years. Naturally, the 3 years one, you have to pay higher interest rate to the investors because of the longer tenure. Yeah. Thanks.
Thank you, King Sing. So the next question we have is, will this facility applicable for company incorporated in Malaysia but invest in overseas project?
Yeah, if it's incorporated in Malaysia, it's actually an eligible issuer. I mean, we do have some of our prospective issuers. They have a lot of they are incorporated in Malaysia, but 60% or 80% of their revenue from ASEAN, Thailand, Australia, and so and so. So it's normal. Yeah, thanks.
Okay, thanks. So the next question we have is, what is the security or collateral required for an investment grade paper?
Now, I think the idea on BR Capital is that we try to put more emphasis on your cash flow, your stability or your cash flow profile. Essentially, with a stable cash flow profile, the rating agency will look at it favorably. That is important. For rating agency, in terms of security or not, that is usually a secondary post-event thing. For them, is they want to look at your cash flow, your generation, your amount, and so. So our emphasis is always looking from a non-security perspective. Let's say come to us, in fact, our first two issuances, they are unsecured. They have what we call credit support from credit guarantee by holding company, get personal guarantee from sponsor, but there's no tangible security being assigned to our first two issues. So again, we want to focus more on the cash flow, the rateability of the company than the issue, and ultimately to decide whether there is a need for security or not. Usually, if the company is, of course, financially not strong and all those, then security is a second option that we will look at. Right. Thanks.
Okay, thanks, King Sing. So we have another question. So are investors supposed to hold till the end of the tenure maturity? And is there any secondary market to trade for this?
Yes. Currently is hold to maturity. Again, as I mentioned during my presentation, we are planning, subject to SC approval and all, we are planning a secondary market, essentially for investors to potentially exit if they want to. But having said that, most of the investors that came to our platform, they are generally okay to hold to maturity, because it's short 2 to 3 years. That's the reason why we are capping our tenure of our financing, not more than 3 years. It really is to facilitate that. But having said that, we are planning a secondary market. We hope to launch it as soon as possible, as soon as we got the green light from SC. Thanks.
Okay, thank you, King Sing. So the next question we have is that, do you plan to make the paper transferable? And what is the maximum amount or percentage that one single investor is allowed to hold when investing in BR Capital?
once we have the secondary market, naturally it's transferable. We are looking at on-market, off-market transactions. Those are transferable. Now, again, I know where the question is coming from in terms of concentration, equity holding, and holding of that notes. Now, I think it's not really an equity. That's one. We don't think we will impose anything in terms of amount, like how many percentage and so on. Again, we are not equity, it's a debt instrument. And the debt instrument will mature in 1 or 2 years, 2 years or 3 years. So eventually holding it and all those, we don't think that is a material consideration. Yeah, thanks.
Okay, thanks, King Sing. So we have a question here that is asked that assuming the issuers of PLC, are the substantial shareholders or directors allowed to invest in the issue?
The answer from us, again, I'm not representing Bursa Malaysia. We are actually different entity from Bursa Malaysia. We actually have a different team. But the answer is yes, because that's what we also, when we deal with issuers, we always encourage their own stakeholders, their shareholders, their supply chain, and so to invest in the notes that they invest, right? So we do encourage that. From that. But I also understand where the question is coming from. Of course, again, there may be certain listing requirement, whether that is deemed as financial assistance or not. Those I will not be able to advise. But essentially, so far, the issuers that we met, we based on the current guidelines, they are open for shareholders to invest in them. Thanks.
Okay, maybe perhaps this is the last question. So for the others, so on the topic of security, would securitization of revenue be acceptable? And would invoice factoring or ring fencing of collection to trustees' accounts be also acceptable?
Okay, so I think where you're coming from is really looking at the trade financing, invoice financing, or even factoring kind of arrangement. So currently, our product configuration is still very much at term financing, whether we would securitize the invoice, so that would be a later discussion that the platform will look at. So currently, just to reiterate, ours is really a term financing. It can be unsecured and secured. Our emphasis is the cash flow, stability of the cash flow profile of the company, certain track record in terms of the last 3 to 5 years, and of course, going through the rating. In terms of invoice financing, trade financing, or even factoring is something that we may consider in the longer run. But as of now, no, we don't offer that service yet. Right, thanks.
Okay, thank you, King Sing, for this. I think this is the last question. So I think we have come to an end for the Q&A session. So I'd like to once again thank you, King Sing, for giving the time to present an insightful session on PR Capital. Is there any last things you would like to say before we'd like to end the session?
Yeah, thanks, Yun Seng. Thank you, the organizer, and thank you for everyone for attending today's short discussion. I think this short, less than 15 minutes, I don't think it's do justice. Definitely you have questions. Definitely if you want to find out more, we have our contact details on the last slide. Essentially, do reach out to us. Happy to have a chat, on your financing request, or how can BR Capital facilitate you in meeting your funding requirements. We're happy to hear that. Happy to have a chat. Thank you so much.
Okay. Thank you, King Sing, for the fruitful and insightful session. And also lastly, I would like to thank to all the participants for dialing in for today's webinar. If you have any questions or queries, do feel free to reach out to BR Capital through the email stated in the chat box, and they'll respond to you accordingly. So once again, thank you everyone, and goodbye.